Inflation in India rose to a surprise 6.5% in January 2023 after remaining below the 6% mark in the 2 months prior. Is this just a blip or is inflation set to surge again? I'm Varsha Meghani and you're watching Nuts and Bolts by Forbes India. Inflation in India has been soaring since early 2020 because of the pandemic and the government's response to it, affecting everything from groceries to gas prices. In 2020, inflation stood at 6.18% compared to 3.73% in 2019. In 2021, inflation dipped to 5.13%, and in 2022, inflation came in at 6.89%. However, November and December of 2022 were particularly good months, with inflation easing to below 6% levels, a first in more than 11 months. It led many to believe that the worst was behind us. But January's spike in inflation has left economists surprised. So first up, how did we even get here? We got here because of a series of back-to-back shocks to the economy. First, in 2020, as the government announced strict lockdowns, India's small and informal sector companies were hit hard, leading many to shut shop. These small, informal firms are actually a big part of India's manufacturing sector. Many of these firms even produce necessities like food and clothing. Their closing down led to supply shortages, while the demand for their goods didn't fall, leading to price increases and therefore a rise in inflation. In 2021, as the lockdowns eased, inflation cooled off a bit. Come 2022, thanks to the war in Ukraine, oil, food and commodity prices shot up globally. India was no exception. However, the small informal firms were again hit the hardest. They couldn't deal with the high input costs given their low bargaining power. This led to another round of supply shortages and therefore price increases. Add to this climate change-related pressures like volatile monsoons, heat waves and dry winters. Last year, heat waves in Delhi, Haryana and Punjab damaged the wheat crop, leading to price increases. Towards the end of 2022, inflation started cooling off, especially food price inflation, but not entirely. So come January, economists were expecting inflation to be slightly higher at around 6.1%. No one, however, expected inflation to come in as high as 6.52%. Inflation in the cereals category was a key culprit. It hit 16.12% in January compared to 13.78% in December, according to data released by the government. In fact, the next 2 to 3 weeks will be critical as the flowering of the wheat crop occurs during this time. If there is a heat wave in India's northern belt, it could damage the crop, leading to another round of price increases. Milk was another area of concern, with inflation coming in at 8.79% in January, the highest it's been in 8 years. The previous high for milk inflation was recorded in February 2015, when the figure hit 9.3%. Usually, India is flush with milk in the winter months. The liquid is then stored to make various milk products in the following months. This time, however, there's a severe shortage, and the reason goes back to the pandemic. 2 to 3 years ago, the present-day milking cows were calves. But due to the pandemic, farmers didn't have enough money or resources to provide them with proper nutrition. In the absence of proper nutrition, the calves haven't grown to become healthy, good quality milk-producing cows. According to Pranjal Bhandari, chief economist at HSBC Bank, it's a timing issue. She says, quote, if you go into the market and import wheat right now when the prices are still low, I think we can get a good price. And if you offload that wheat at that good price into the market, then inflation could ease a bit. But if you wait for a bad crop and then go into the import market, that can be a problem. Because as soon as the news spreads, wheat prices will go up globally, because people will know that India is going to enter the import market in a big way. That won't help ease inflation. So being strategic and pre-importing wheat and milk powder is a good idea, end quote. Moreover, given the Fed's hawkish stance, the RBI is likely to follow suit and raise interest rates by 25 basis points, either in April or in June, when the Monetary Policy Committee meets again. crop only comes into the market in April, so through February and March, we will have to work with the shortages of wheat and milk, unless the government decides to suddenly import the items. In the absence of importing, inflation is expected to remain high in the 6 to 6.5% band. Beyond that, it depends on the winter crop. Bhandari expects FY24 inflation to come in at around 5.4%. The government will make every effort to bring down food inflation by importing the necessary food items if needed, or even becoming more nimble in selling food stocks from its granaries. After all, in the run-up to the national elections in 2024, the government will not want food inflation to become a sticky point.